we're going through a phase transition. Bitcoin's gone through many. That drive down to where we are now in the mid-30s, that was fully from sell down from the futures market. They started selling down while the spot investors were accumulating. So it's interesting now. And it comes in a time where structurally we're like a lot stronger than the last top, where the whole thing capitulated under the China sort of mining ban and all this negative ESG narrative. Now it's different. The guys that have held their coins for a long time, like 5 months or more, they're not selling. The history shows that they sell once there's profit to be had. Why not, right? You've held your coins for 5 months. You're not going to sell now. Structurally really strong. We're at peak levels of long-term holders. It's not a bear market if you look at that metric.
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Today, I'm sitting down with Willy Woo. Willy Woo is a New Zealander with 15 years experience founding multiple startups. Previous, he was an angel investor and a trader during the 2008 world financial crisis. And today, Willy Woo has emerged as the leading on-chain data analyst globally. In today's conversation, we talk about Willy's Bitcoin origin story, the current state of Bitcoin, institutional money flowing into Bitcoin and its impact, a Bitcoin spot ETF and GBTC, Willy Woo's thoughts on Bitcoin cycles, his portfolio allocation, including his cash and carry trade right now, his thoughts on Plan B's stock to flow model, his current favorite chart that he's watching today, as well as his early years and what led him to Bitcoin and ultimately becoming the leading expert as an on-chain analyst. So with that said, let's dive in with the legendary Willy Woo. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by Withum, Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. Withum now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using Withum both personally and professionally for nearly a decade for all of my business's personal needs as well. I'm very happy with them and I highly recommend Withum. You can contact Withum by visiting their website at withum.com. Now back to the show. Willy, welcome to the show.
Hey Jay, great to be here.
We just talked for about an hour.
Yeah, we talked for an hour, so we warmed up. It was a warm up.
Exactly. Well, we're going to talk about a bunch of stuff today. I think the first thing I want to talk about, we talked about previously on the call, is your Bitcoin origin story. I'm sure you told it 100 times, but I thought it was interesting. So if you want to just tell me when you first were introduced to Bitcoin, what year that was, and what made you see it as you did see it, as you described to me as gold, because I didn't see it.
Correct. Like, I mean, somewhat like you, I was in the tech world and like I was working on yet another startup, and the lead dev said, "Oh, look, Bitcoin broke, I think it was $1 billion market cap." And I was like, never heard of it before. This was in December 2013. And I said, "What is it?" And he said, blah, 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 blah. I can't remember what he said, but it was like, oh, so it's like digital gold. And I was thinking, okay, that's interesting, because I invested in gold before the world financial crisis. So I understood that a little bit. And I was like, okay, so let's say it displaces gold, then that's $450,000 per coin. It was currently trading at $600 because it just peaked at 1,200 and it crashed to 600. And I was like, oh, I'll probably kill myself if I didn't buy at least one. If it did go to 450, it'd be pretty shitty to see that. So I bought one Bitcoin, right? And I gave it like 12 years because I saw the iPod come over and like displace, CDs, vinyl, all the sort of physical media for music. It went all digital, and I was like ripping MP3s in the 90s, and it took 12 years later, it was the iPod and it was all digital. And so I was like, well, it seems like it's an MP3 zone right now where everyone's ripping shit. And that means 2025, it'll be worth $450,000. And I was like, it's worth buying. So that's what I did. I bought one Bitcoin, and then like through the course of that year, Bitcoin meetups, all this. I learned what it was, and I kept stacking into the bear market. So that was really it. I didn't know much, but then I learned, and then I got more and more fascinated. Went down the rabbit hole, and interestingly, well, by 2014, Ethereum had done its ICO, and it was like I knew nothing about that either. And like someone I met that I really trusted said, "You should buy." He was South African. "You should buy this." I met the founders in Hong Kong, some Hong Kong conference. They're really smart. I'm gonna buy such and such amount. I said I would. Gonna do it now, and the ICO went live today. So I just bought a little bit of that too. All the stuff went crazy by 2016, 17. But I can't say I knew much when I first bought. It was just an ongoing learning journey, and it took probably to 2016 before I had a fair handle of what I was investing in, and that ended up going down the data route.
That's what led you to on chain, right?
Yeah, it was actually I was just hanging in Bali at that point, and like like there was a guy called Gary. He ran the Bitcoin meetup. The very first one was like maybe 2 years earlier, and only him turned up. Like nobody was there, and but by then it was like this is 2014. A good like 20, 30 people turn up each day, each week, and I said, "Does anyone want to contribute?" And I said, "Oh, I'll take 10 minute slot, a 10-minute slot." And I thought, well, I really like numbers. I'll do the number of the week, you know. And actually, so every week I was forced to look at some sort of metric on Bitcoin, and blockchain.com had all these, charts of the network, the mining, the transfer volume, all this stuff. So I just push stuff like that up and talk about it. And that was when I started looking at on chain and seeing like all these, patterns arise. And so, yeah, indirectly, I started to run ratios across the on chain metrics, and I discovered, wow, you can value the network off this stuff. And like, so it was kind of, it wasn't deliberate. It was, just completely by fun and accidental that I got into this. And yeah, so that's how it happened.
Let's move forward to, because it's pretty topical right now. If you're looking at what's happening in the markets, we went from 64,000 to 29,000, went back up to 69,000. We shot back down to 32,000. There's a lot of volatility this year. Number one, are we in a bear market? And I want to talk about the current state of Bitcoin essentially. So let's kind of like dive into where we're currently at, what's happening, and are you bullish or bearish right now, short term, midterm, and long term on Bitcoin?
Yeah, I think we're going through a phase transition. Bitcoin's gone through many. Probably the last great one was the start of 2013 when futures arrived with BitMEX, and that changed the complete dynamic of trading. And then the next phase transition was the introduction of institutions in a big way with MicroStrategy that led a lot of credibility amongst hedge funds. So we had Ruffer Invest, any number of hedge funds and high net worth people in that space, like Ray Dalio came out and said he was investing. So there was then this validation. So a lot of spot investment from institutions and family offices, which happened in pretty much 2020, and now we're in this phase where I would say another transition where the market's maturing, getting more sophisticated. We've finally got an ETF. Unfortunately, it's a futures-based ETF. We've got significant volume on the CME futures exchange, so we've got very large, I'd say, Wall Street players that trade it on the futures market, and that is having very large influence on the price. And so that last 69,000 top, the market was still accumulating on chain, but that drive down to where we are now in the mid 30s, that was fully from sell down from the futures market. They started selling down while the spot investors were accumulating. And usually in that situation, it's going to resolve one way or the other. And this time, the futures sell pressure overwhelmed the spot buyers, and then they switched to selling. So, this is the first time that I've seen a significant move of this scale where on-chain lagged. So that's very interesting to me. The top was really from a different market, quite different from tail end of 2020. No matter what the futures markets were selling down on, the tidal wave of money coming in, buying spot, withdrawing into their on-chain wallets, overwhelmed the entire market. So it's interesting now, and it comes in a time where structurally we're like a, a lot stronger than the last top, where the whole thing capitulated under the China sort of mining ban and all this negative ESG narrative. Now it's different. It's just the futures selling down while everyone's holding on to their coins. We saw a little bit of hodlers sort of divesting a bit, but nothing major. And so if you look at that in the macro terms of demand and supply,
Yeah.
the guys that have held their coins for a long time, like 5 months or more, they're not selling, right? Like it turns out anyone who's held their coins for 5 months aren't selling. The history shows that they sell once there's profit to be had. Why not, right? You've held your coins for 5 months. You're not going to sell now. So we saw a bit of that selling as we ran up to 69,000. They bought, in the sub 40. They made a nice profit. And the moment we dipped it below the 40,000, they stopped selling actually, and they started accumulating actually as a cohort. So structurally really strong. We're at peak levels of long-term holders. It's not a bear market if you look at that metric. And then in the shorter term, we're in a really interesting phase right now where you can look at the strength of the different types of cohorts of investors. You've got swing investors, you've got the hodlers. The hodlers stack, they keep accumulating. Very seldom they divest a little, but there's the speculative guys that buy and sell almost on par. They will zero out. They don't care about the asset, holding it long term. And you can compare their strength of holdings, like are they accumulating, are they dumping? You can measure their strength. And right now they're holding and accumulating, and you can compare that to the price because there's a very strong correlation between their behavior as holders or sellers and the price, and actually it leads it. And so the price is sold down so low and their level of holding hasn't budged that much. In fact, it's rebounding from a little dip right now. It's put us in I call it kind of like a total eclipse of the sun. It doesn't happen very often, but it's happening right now. Both of these types of cohorts are at peak levels of holdings versus the price. The differentials at peak, it's like 2 standard deviations from the norm. Last time we were in this zone was in October. Before that, very briefly, was the bottom wick of the COVID crash. Before that was the bottom wick of the 2014 bear market, which happened in January 2015. And before that, it was 2012 when Bitcoin traded at $5 before the 2012-13 bull run that led to $1,200. So in the short phase, shorter term, we're at kind of a peak oversold. Might take 2 weeks for that to take effect, maybe more. Like probably by the end of this month, I think it might take effect. And then in the very, very short term, over the next few days, there's a little bit of technical resistance to shake off, a lot of fear, correlations to risk off, risk on, and equities. So I think that needs to shake out. And
that's the part that I wanted to ask you about, the risk on risk. So the Federal Reserve, like, is the Fed relevant to Bitcoin?
Short term,
a lot of people talk, right? The monetary policy, do you think it's relevant?
Yeah, I think it's short term. Like it creates a lot of ripples in equities, and we're highly correlated in the short term sense of it. On the long term, also, like if it's highly inflationary, I think there's some amount of people that hold for that reason, but you won't see that. You won't see price respond to that very, very quickly. So right now we're in this really highly correlated zone with equities, very much like mid 2019, post post-COVID. Oh no, 20. Wow, even no, it wasn't. It was just trading correlations to risk on, risk off way before COVID. So it was 2019 to 2020. We just went sideways, and it went up and down based on correlations to equity. No one really saw, unless you were an on-chain analyst, no one really saw that there was a lot of accumulation coming that was not reflected in price. And so you can kind of think of the short-term price as it's a random walk. I don't believe in efficient market theory that all the information is priced in. I think of it as just a bunch of traders trading what will make them the most money. There's a lot of people going short, can I squeeze them out, or markets going this way, I'm going to trade that correlation, especially with these kind of institutional traders in there. They're going to trade these correlations because that's what they do. And so it's like this pogo stick going up and down, and whether they jump or they don't jump any one day is dependent on how they feel over equities.
Because this is a new dynamic that we haven't seen, I think, previously, right? You're seeing institutional money come in. Institutional money is trading, and they're moving into markets. They're moving a lot of money, right, for
Yeah.
Bitcoin, and they're moving along with risk on assets, right? So I guess the question is, if everyone's looking at the S&P for an idea of how Bitcoin might move, which previously I don't think 2013 they were doing that, right? But today they are. Is there anything that we can see on chain that might help us interpret how positioning in the legacy markets might unfold?
I don't know. No, I don't think so. I don't think so. Bitcoin's too small to impact legacy markets. It's way too small. Um, yeah, it's more the other way around. But then we've got Bitcoin's got an internal engine of its own, which is its own adoption S curve, right? And so
Yeah.
we're in this, you know, we're now in the early mainstream. So this thing's going exponential. So that thing is driving the engine house of Bitcoin. Meanwhile, you've got institutional traders that do not acknowledge that. They're not venture capitalists. They're trading correlations. You're on this pogo stick. They don't realize that the pogo stick's jumping up and down on a bit of land that's rising and rising based on this adoption S curve. So eventually, like, it's risk off. We should short. Meanwhile, the ground won't let it. They're going to bottom out and the thing springs up. And that's what happened in October. We actually reached the fundamental valuation where the spot investors were like, I'll buy that. It's been 10,000 for so long. And they've been buying and buying for over a year. And so it bottomed out and the thing had to squeeze upwards. And now we're back in this sort of price discovery where there's spring to bounce on.
That's a great question. We're in price discovery now as to where it will be until the next move up, like to your point, as the floor rises up. And so if the S&P crashes this year due to the Fed policy, et cetera, what do you think happens to Bitcoin? What do you think a bottom is when you look at the charts, right? Where do you see a bottom based on the previous accumulations, et cetera? Where do you see a bottom happening in this particular cycle?
Well, on-chain's not very good at looking at price targets. You tend to go technical, or you can look at behavioral and see what price people bought in, but it's not very accurate. Like I can say this is a zone in which we should bottom, and it's more like now's about roughly the time, but you don't know what's going to happen. Like
No.
suddenly a COVID event happens, and bang, we'll lose another 50%.
Facebook misses earnings today.
Yeah, that's very random, highly volatile. The liquidity can be pulled, like in COVID. There was no buy side liquidity for very quickly. Over 48 hours, everything crashed, but it recovered very quickly within 4 weeks, right, of that drawdown. More than I can say for other markets. And so, like, sure, you can have a wick down, and like if you're trading, you're going to get screwed unless you've got your risk protection. But all I'm saying is, like, if you're a spot investor and now is a good time to buy and it wicks down 50% and you're not on leverage and you're not going to get liquidated, you wait it out like we did in COVID. And I honestly don't think we're going to go down that unless there's this weird white swan event that no one can see coming. On-chain says the pogo stick's bottoming out right now. It's very hard to force it down any lower.
I like the pogo stick thing. I haven't heard that one yet. I like that.
Like technically, it looks toxic. I've seen it again in Bitcoin. It looks toxic, and then it squeezes out. But adoption S curves, all sorts of stuff happening. Like, to give it an example, we're right now at the same level of accumulation as we were around $50,000 to $60,000. Remember, like the first half of 2021, last year, first half, there was no fear in the market.
Yeah.
The level of accumulation in the market is similar to now. Yet we're sitting in mid 30s because everyone's in peak fear. The future's selling down. All the trader demand has gone to divestment. So they're a net sell pressure. And that's the difference between the market now and then, where previously they were long.
And that's just macro, right? That's just what's going on in the markets, equity markets and what have you, right? That's what's driving that, I guess.
Yeah, and their emotional fear.
Yep.
But the on-chain world, you can see what these long-term investors are doing, and it was just as strong as the 50 to 60,000 band of last year. So it gives you an idea. And like usually you see these deviations where the price continues to go down despite that, but there's only so far it can go down. And that gravity of where the fundamental investors are will pull it back up. And yeah, it's stronger than I've seen in a long time. I've been waiting a long time for the setup. Setup is as strong as we were in October 2020. So yeah, it's an opportunity. I'm kind of like waiting. Like I've bought in, right? But I'm kind of waiting for the final kind of technical. Like right now, technically, um, were the RSI, which I like. The RSI trend line's broken out of a 2.5 month downtrend. And then it looks like a bump and run. It's basically, it breaks out, it comes back and tests the support, and then we're off. And we've just come back, and today we're testing the support. We had to break out. We had like this last week or so, we had this run up, and we're at trend exhaustion using like TD sequential. We're at trend exhaustion, so we need to take a break. But the last time this trend line broke out was the 29K bottom. Um, like we had like a 3 month downtrend on the RSI, and that broke out. And then following like a day or two, the price broke out, and we were off to the races. So I feel like we're in that zone again. I'm just waiting. So if you're going to do leverage, like sometimes I do the leverage game.
Mhm.
Like you want to be sure that we're on up. You don't want to be early on a down on an uptrend when it hasn't actually done that yet. It can be pretty painful.
What has changed in Bitcoin as an on-chain analyst? So this is a question somebody posed. So what has changed as an on-chain analyst with the introduction of institutional money entering to Bitcoin, as well as the public companies holding Bitcoin, as well as public miners and the future ETFs? Seems like a lot has changed since you
Yeah, a
started
lot of
doing
change.
this. Yeah. So tell me about that. Talk about the changes in
Yeah,
on-chain
everything's
now.
changed.
Yeah. Everything.
Yeah, but this time it's different. Yeah, sure. It's like it's same but different, as you say in Bali. Um, you know, like it's same but different. It's the same game, right? Like all we've been doing with on chain is trying to figure out the fundamental demand and supply between investors. And if you think about it, demand and supply mean the same thing because the investor's selling. Well, so is it, that means someone's buying, right? That's a trade.
Yeah.
So all you're doing is different ways to assess which one is smarter, right? Um, so you look at the qualitative view of who is buying and who is selling. So we're doing that on chain, and we're doing it even more in more sophisticated ways. Now we're doing on chain forensics. We're looking at, well, let's look at all of the wallets, and let's look at their behavioral patterns, and like, oh, this guy's a hodler, this guy's like a weak hand. So we look at that, but then you can look at derivatives data and say, all right, well, we know the plebs trade on perps, um, love Bybit, right? They're all like YouTubing, watching YouTube stars and Bybit long perps or short perps, and then you look at the institutional guys, and they're buying calendars, and so you can look at the demand supply on calendars versus perps. It's like it's the same game, right? It's a different instrument. So same but different. And then you've got to account for what are the institutions doing. Um, like, so you need to talk to them. you do need to talk to them. You look at OTC sort of markets as well.
Have you talked to family offices that are managing a lot and understand what their mindset is?
Yeah, because I'm like a general partner in like 4 hedge funds, and so our LPs are family offices. So yeah, so like, but the institutions are good. Well, you know, yeah, well, the institutions do the same analysis. In fact, we are an institution. We are an institution that invests for family offices, and we do the same analysis.
Yeah.
So it's same but different. The same stuff is working, yeah, and they actually, like, we look at the family offices. They're not experts in this, and they rely on hedge funds that are very good at, and they're deep inside Bitcoin and the crypto sphere. And what do we look at? We look at on chain. On chain's
Yeah.
bullish. Okay, let's buy. Right. So it doesn't negate what's happening. It just is much more complex because now you've got on chain saying bullish while futures going bearish, as it was for the last 2.5 months. And and then you got to look at what retail plebs are doing, right? And liquidations. It's just, yeah, it's just a lot more things to look at. Mining's interesting because their sell power is nothing compared to the rest of the infrastructure around Bitcoin now, right? So it's
Can
like
you explain that a little bit better? Yeah.
we know about the demand side dynamics, right? Which is adoption S curve. Everyone's buying in to get exposure, and then like, what's the supply side? It used to be very simple, right? It was just
Mhm.
um, miners. New coins minted, it's inflation. They sell to pay for their OPEX of that infrastructure behind Bitcoin. And so that would have, and every 4 years it would have supply side halves. And that's
Mm.
got this nice sort of cyclic 4 year run up. And everyone thinks that we're doing another 4 year cycle, maybe less this time because of the shape of the chart. But you look at what happened in 2018, was BitMEX came along with large volumes, and they were making billions of dollars. And you work out how much money they make through trading fees. By the way, BitMEX and every exchange is another infrastructure behind this ecosystem. Every piece of infrastructure that is in this ecosystem is only there because they're making money. And what do they do with that money? They sell, right? They sell to run their OPEX, they take profit, pay salaries. So now we've got like futures exchanges that are doing the kind of volumes that spot exchanges would dream of, right? The Krakens would dream of the kind of volume that BitMEX and now Binance Futures and FTX do. Like, we're talking like profits 10x higher, sell pressure 10x bigger, and so on an average day, the exchange infrastructure behind futures is way bigger than mining. And on a good day, it's like it's a joke comparing the two. So now you've got this supply side dynamic that um, just makes mining kind of irrelevant because mining's becoming more irrelevant in terms
Mhm.
of supply side. Like, it's halves every 4 years. It's becoming half as relevant, and now you've got a futures based spot ETF garnering billions going into that, and so now you've got this. If you want to hold a ETF on the stock exchange, it's a futures ETF, and that's not buying bitcoins; it's renting bitcoins because all they're buying is a long contract on the CME, which is a futures contract. And if you aren't buying a futures contract, you don't hold the underlying, you're having exposure to it. And there's this thing called a contango, right? It's like, well, say Bitcoin's at what, 36,000? That futures might be worth 40,000 right now, but it's going to collapse down to the price of Bitcoin when that futures contract expires. So you're renting it and you're paying rent, it's decaying. So it probably is 10 to 20% per annum rent to hold that. So billions of dollars are going into spot futures ETFs, renting access to Bitcoin. And now you've got 20% of those billions now, again, profit, rent, sold onto the market. So a lot of sell side dynamics. I really dislike the futures ETF. I think the SEC did us a very big disservice. So, yeah.
Which is crazy because Gensler totally gets Bitcoin? Why do you think that happened?
Because he's not a friend of Bitcoin. He's probably being lobbied, and like there's a
Yeah.
lot of political pressure. I totally imagine the incumbents, which are the banks, want price suppression of Bitcoin, which is their like main competitor going into the future. Every bank needs some sort of blockchain, crypto, Bitcoin strategy, and like anyone who's in Bitcoin, let's be honest, it really makes the banking infrastructure obsolete if it gets bigger.
What do you think of GBTC, right? So how much of an impact did the grayscale cash and carry trade have on the 2021 bull market? And since that has been eliminated in early 2021, it seems like Bitcoin hadn't really fully recovered. Do you think it has anything to do with the bull run up and then the crash because it collapsed and then went negative?
I think that we were on an exponential climb and a pop. We didn't have a whole number of futures, but with the grayscale ETF. Our trade is basically taking the heat out of the market, and we had a rounded top.
It was a confluence of things happening with the China
Yeah,
fund. Yeah,
and there's a lot of ways in which to capture the, normally in a spot market, you'll see this in shitcoins. They go exponential. Look at Doge to the moon, right? And there's no sell side dynamics to it, so it gets squeezed upwards like crazy. But when you have well-developed all sorts of markets, arbitrage markets, futures market that can short it, you can take the heat out of it. So the thing never trades at a huge premium to the underlying, spot investor levels of which they're valuing it. The speculator's like, I'm buying this because it's going to the moon tomorrow. I'm going to sell. They're playing chicken with a freight train, and everyone loves doing that. And with this thing is like these other guys come and say, I'll take that heat and profit off it by generating yield and be hedged. That's what the grayscale sort of arbitrage play was. And like a lot of this sort of stuff took the heat out of it. And we end up with this, what I call a random walk all the way to, trillions of dollars of final price discovery of Bitcoin. No more of these parabolic pops. We just go random walk upwards.
Yeah, you said this on Peter's show. You said that you think that this is the last cycle, now shorter cycles and walking up.
Yeah, we've just had another cycle, right? It's like little ripples of cycle. No more 4-year cycles. This is the final cycle that takes us to, what is it? 10 trillion, 25, 40 trillion, 100 trillion, whatever it is. This is the one that's bumpity.
What do you think the potential is, actually? That's a good question because you're saying 45. And I've heard you say it's a bunch on parity with gold. Do you think we kind of tap out there, growth diminishes at some point in terms of the CAGR, and then it just becomes a slow rise? Or do you believe in hyper-Bitcoinization to the 100 to 200 trillion?
I think it's very, very over-optimistic right now with all of these. Even the stock to flow, I think it's over-optimistic. When we say this, we've got to say we've got to, discounted cash flow to today's value because we don't know what the US dollar is going to inflate to in the future. In today's dollars, we're at, we're flirting with 1 trillion. I think we need to get past that to get legitimacy. Mm-hmm. I think from 1 trillion to maybe the gold cap will be relatively smooth. Beyond that, I think it's going to be slow going. I did sort of like wisdom of a crowd thing, and I just went out, what do you think it'll be? 1 trillion, 10 trillion, 100 trillion? And, vote weighted average was about 40 trillion. That's fair. It's like US dollars is, I think it's like 20-25 trillion.
Did you put that out on your Twitter? Like you put a poll or something?
Yeah. So
you got enough audience for that to get a good idea what people are thinking. So
yeah, like they should know enough to have a fair guess, and
they're the buyers.
Right. So I think that's a fair guess, actually. I don't think we're doing 100 trillion. Well, it might do but in today's dollars, I don't think so. But
because to me, it comes about. I talked about this with Hodl a bunch. It comes down to what's the CAGR, right? So you can't have everybody, the clubhouse and spaces. They'll be like, Bitcoin's 200% CAGR for the last, since inception. I'm like, that's disingenuous because nobody bought it at a penny and held it, right? Like,
wait, what's CAGR? I don't know.
Compounded annual growth rate, right? From moving forward.
Right.
Yeah, the CAGR, the compound. We always call it.
I'm just asking for the audience.
Oh, okay. Yeah. No, you have to know that. I was like, what, are you crazy? No.
So, right. Gotcha. No, I never heard anyone call it.
We call it CAGR, and we joke around, we'll have CAGR parties.
Right.
You
right.
but no, like in all sincerity, like they say it's been a 200% compounded growth, right? And I'm like, that's if you bought it at a penny. So it's more
Yeah.
like 130% if we're realistically over the last 8 years.
Stock flows next this run, because it sort of does kinks. This current run we're on is 110%.
Yeah.
We're not doing that right now, and I don't think we will. And these fundamental reasons why I think that. And like if you look at stock to flow, fundamentally, it's like this is how much scarcity there is, and this is how we value it, right? And so it just turns out it's all on a straight line. It's very scarce, like gold. It's
Yeah.
worth this. Same with silver. Real estate's even more scarce, and it's all Bitcoin in the early phase, Bitcoin in the 2012 phase on this line, but it's deviating, right? After the 2015 halving, it deviated below it, and then now it's even further deviated from that straight line. 2015, what happened?
Well, there's a lot of other options with NFTs and altcoins and for these types of assets. Yeah.
So, like, the flaw in stock to flow, in my view, is that it views Bitcoin as the asset class. Yet investors do not think of Bitcoin as the asset class. They think of digital assets, crypto as asset class. And you could talk to
Yeah.
any family office. Hey, what are you buying? Ah, Bitcoin, bit of Ethereum, maybe Solana, some NFTs, right? So they're deploying that capital that they've reserved into the bucket called crypto assets. And so now it's been diluted. So like 2015 is interesting. It deviated from that line because Ethereum came along. And now in 2021, like last year, it deviated further because we.
And it really matters what people think that have all the money. I talk about this all the time. I'm like, guys, 80% of the wealth is controlled by like 10% of the money and institution and family
Yeah,
offices, and that's what matters. What they believe and understand matters because that pushes the price based on their demand, right?
we already knew this, right? Even in 2017, people were buying shitcoins, right? Everyone's buying a whole lot of like crap, but it was retail. But the bulk of the money didn't want to deal with all that crap, and they just bought Bitcoin. But when Ethereum came along, they bought Bitcoin and Ethereum, and now they're buying all sorts of things at large scale. And so you see that deviation down from that straight line. And I've been waiting to do this chart, trying to figure out how to do the chart or stock to flow of the crypto asset bucket, and maybe it actually brings us back up.
Right.
Maybe that one works. So I don't think that we're on this path with Bitcoin. I think it's overvaluing it. I don't think we're going to do 110% per year according to stock to flow. So which makes it very different.
What do you think the compounding growth is moving forward? What do you think the CAGR is moving forward?
I don't know, like below 100%, above 50%. It's like predicting the future.
For the next 5 years, maybe, and then it decelerates even more, right?
Yeah, I think it just depends. Like it depends on a lot of things. Like, does Ethereum blow up? Or like, is Ethereum's like the new monetary asset because of its deflationary side of things? And
Mhm,
so
mhm.
it's like a whole lot of things how the market plays out. And I think it's hard to predict that, but that's a ballpark, 50 to 100%,
Mhm.
somewhere in that.
I think that makes sense for the next 5 years, and then it will decelerate, probably
Yeah, it would decelerate, right?
35 to
But
50% or something like that, yeah.
yeah, like, well, what are we at? Like, let's say we're at like below $1 trillion, but let's say we're at $1 trillion and we go to 10 trillion, which is gold. That's a 10x. So maybe
Yeah.
we go to what's the 40x to $40 trillion if that is the end target. It's 40x. Gosh, I mean, I was like 133x in the last bull run up to 2017. 133x, right? That was like 2 years.
You'd be at over 100 and some trillion dollars with when is that, I'm not saying it's never gonna get there, but what time frame did
2 years versus it's going to take a decade or more to get to that full saturation. So I'm like going,
unless there's, like you said, a black swan event that collapses the dollar, in which case money might flow into Bitcoin somehow or
yeah, maybe, but we're talking about today's dollars and like, yeah, maybe. No, I don't think so. Like it'll flow into traditional assets as well.
they'll just go to cash while the markets are crashing. They're not gonna jump into Bitcoin. Everything's gonna go Bitcoin, everything will get decimated if that happens, you know?
See, I don't think Bitcoin's main enemy is fiat. No, wait. Like, I don't say enemy. It is probably that fiat is the enemy of
Yeah. I
Bitcoin.
was like, "Wait, what?"
I'd say the market competition for Bitcoin is not fiat. because no one holds fiat as a store of value, um, unless you're a trader. I'm storing my value for 48 hours before this thing bottoms, right?
That's it.
Right?
Yeah, short-term store value.
You know, you're buying like a house, right? You might be buying fine art. You might be buying equities. You might be buying collectible whiskey, right? So that's the competition. So that's like, how much of a chunk are we going to take out of the real estate's 200, $300 trillion cap? I think that's what you would talk about around valuations, not around fiat.
I think you're right. I think it's gold topples first, right, for store value into Bitcoin. And then I think real estate. There's a lot of store value in real estate. Like I'm looking at properties in Southeast Florida. It's crazy. I'm like, what is happening down there?
I mean, I sold my house because like it was too much hassle, and I was like, all right, I'll throw it in the crypto. And it's like crypto is mature enough. It's not that risky if you know what you're doing. It doesn't have
Mhm.
to all be in Bitcoin. You know, it could be in cash yield. But still, cash yield. By the way, cash yield in crypto, right? Cash yield in US stable coin stuff. It beats real estate.
Let's go over this because I heard you talk about this with Peter as well. So, can you just tell me in terms of like portfolio allocation for yourself, like assets, real estate, equities, commodities, Bitcoin, crypto, rather, and then cash? Like, what percentage do you have in cash right now? Historically, what percentage do you have in cash, and what is your percentages roughly over like the last couple years, and then moving forward?
It's changed a lot, right? Like in 2017, it was like moon boy stuff, right? It was like, well, geez, you're going 133x and you're going to like 1,000x on shitcoins. Like I was like zero cash. Like I was like, oh, what do I have to sell now to pay rent or like my next plane ticket? It was really like that, right? Now it's like absolutely 10% at all times, no matter what. And I need to get that up to 20. And I think the way we're going, choppy upwards. I'm going higher than 20 eventually. The goal probably is cash yield
I
50% or
think you
more.
said 20 to 40% you might do, right?
Yeah, I think the end goal would be around half of it in cash yield. It's just set and forget. Like if you get a good yield,
And what are you doing for cash yield? What do you do?
definitely not DeFi. A little bit, but not. Like this is the topic of you know, I'm currently running the setup of a fund, and it's a proprietary fund. It's like we're doing a fund, and it's kind of it's cash yield, and it cash yield via investing in um, ventures, quant traders that are
Mhm.
market neutral trading. So effectively, we're investing in ventures, quant firms that can extract the inefficiency out of the market. So simple cash and carry trades, arbitrage across derivatives, across from options to futures to DeFi to all sorts of stuff like that. Bitcoin's very inefficient. The whole crypto as a whole is super inefficient, and you've got this constant new influx of inefficiency, right? The new shitcoin, new DeFi coin, new anything coin comes up, highly volatile, highly inefficient. So there's a lot of traders out there, quant firms with sophisticated models that can extract the inefficiency and arbitrage and bring it in to line. And that yields, if you're very like unsophisticated, you probably can get a 10 to 15%. If you're highly sophisticated, you can get 150% annualized. So this is like a VC for quant traders. We're looking for the really hot, interesting firms that have got interesting models and are hungry. They don't carry a lot of capital. They might be trading 10 million. The bigger ones tend to do up to 100 million. But we're looking at the little guys that can get really interesting performance, and you run a portfolio across it, and suddenly your basket looks very stable. It's like, wow, like a little quant firm can screw up and make a loss, but you don't make a loss, not across a portfolio of like 20 or 30 funds, quant funds that are trading. So
I have to ask you, you're increasingly moving this way because you see a lot of volatility moving forward with Bitcoin in the short term. Is that why?
no, I think that I'm moving this way because I see that Bitcoin's yields, like gains, are going from 50 to 100% annualized. And when I see like, wow, we can get like 40% annualized by pulling inefficiency out of the market, and maybe that'll drop to 25%, right? But damn, that's good because you not get 1 month of drawdown, not ever, which means this thing numerically, um, outside of counterparty risk, right? The exchange
Yeah,
goes down, or
of course.
you're hacked, right? Um, outside of that, this is lower risk than real estate. Real estate goes down; it's choppy. I mean, I've got the data
And it's
for
illiquid
this.
when it goes down. Yeah.
It's super liquid. That actually, like, if you look at real estate, at least in the market I looked in New Zealand, it didn't like equity went bang, Bitcoin went bang downwards. The real estate market in New Zealand went upwards slightly, like flat. Why? Because it wasn't liquid over
Yeah,
there.
it's slow. Yeah.
So it didn't. You got monthly reporting,
Mhm.
and so
There's not a daily
anyway,
price quote.
you could, like, in theory, if you wanted to risk it up and take, like, if you want to take the kind of risks you were doing within crypto, like Bitcoin, well, you just 2x leverage it. You're not doing a down month anyway.
Yeah.
2x, and now you're doing the same return and you're not getting a down month. So,
Yeah.
like, risk adjusted, like, I think yield is the most interesting thing that's entered the space in the last 2 years. And I think a lot of people, like, even token projects are, they're doing crazy yields. They're doing DeFi yield. I don't like DeFi as a yielding thing because it's kind of like open season to be hacked. Like, we've seen some of the funds that do DeFi, and they're really great. They perform great until they don't, and then they get rugged and lose like 10% drawdown in a effectively market neutral trade. It's like, yeah, yeah, a lot of counterparty risk in that, or I don't know what do you call it? Is it counterparty risk? It's smart contracts risk.
Well, it's a counterparty, right? Yeah.
Yeah, yeah. So you've got possession of your coins. You just don't know whether or not the contract says what you think it says.
See, this brings me back to a question I had written down. So it's like if we can agree that these new outside variables in the markets, like institutional money, et cetera, that are entering to Bitcoin have an impact on the price of Bitcoin, and those outside influences are heavily fiat minded and likely are heavily influenced on the macro conditions, like the 2 year and the 10 year and the curve, monetary policy as a result, right? Wouldn't that indicate that Bitcoin will have some resistance if conditions tighten over the next 6 months? And is that possibly weighing on your mind that these conditions exist and you're talking to family offices, right? So all this stuff kind of influences your thinking is my guess, right? And so you're saying, okay, I'm not seeing this growth moving forward based on what I'm seeing on chain as well as what I'm hearing from the institutional players that are moving the money around. So that's pushing me more to this cash and carry trade and all this other kind of stuff.
Yeah, I think things we're getting into the early mainstream, which is interesting, but also in some ways we're getting into the early end game because the big boys are here, and you can see what they're thinking, how they're thinking about it.
Right. Right.
And now we're seeing how the infrastructure is playing out, and we don't have spot ETFs, and we've got a lot of the big boys playing regulated instruments that are toxic to Bitcoin, like the futures ETF. So I can see there's now we're in a situation where the financial market, the traditional financial market, has got a hold of Bitcoin. The only way you can really destroy this network, I think, is via price. If you suppress price long enough, your adoption goes away. And so, yeah, like, I think it's going to do okay, but like, I think there's these edge risks of like what happened to gold happening to Bitcoin, like endless paper suppression of Bitcoin. And so, what does that mean in terms of Bitcoin moving forward? I don't think we're doing 110% annualized forever. Well, even the next 4 years.
I kind of think that we might do it longer than you do, but who knows? And we don't. You probably have more insight than I do. But I thought it would happen. I thought that we would decelerate a little bit later on the adoption curve.
I think that well, if you look at the stock to flow, to me it's just like you get the inflation curve, you put on a log chart, I think what you do, and then you flip it upside down and invert it, and
Hmm.
then it just copies the price of Bitcoin. And you just look at that, and then you sort of run a
Repeat that. What do you do with the chart?
stock to flow. Essentially, is the inflation rate of Bitcoin flipped upside down, and then you stretch it and so it matches the price, right? And the
Hmm.
coefficients of the regression that matches it is essentially the amount of stretch. You sort of like, The inflation rate's going down, 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 down. You flip it upside down. It's actually on a curve. Sorry, it's not log. It's on a curve downwards like this, and then you flip it, and it looks like a curve upwards. And then you stretch it, and then it matches price. Okay, and it's really a curve match, and based on this inflation rate, and I think the curve starts to fall off because the relationship of what we talked about.
So what do you you know Plan B, right? So what do you think of that model then? A lot of criticism. Like Corey from Swan thinks it's a bunch of voodoo and it's garbage and it's not scientifically proven statistically. I should say statistically, not scientifically. It's not statistically proven, he says. It's a great meme, I can tell you that at a minimum. Right? It's certainly a lot of people relied on it, which probably wasn't a great idea.
I think it's got fundamentally the idea is good, right? The fundamentals of the idea is that we've seen in nature, of the nature of financial markets, this is the end game of how we value things. So that's solid, right?
Mhm.
And so then he did it with Bitcoin, but I think it was with a mindset of a maximalist saying this is the only thing that will exist. So even in that, the model breaks down because Bitcoin gets to zero inflation, so the price should go to infinite, and it should be the rule of the universe. And I think if you to take the model and then you add to it the real dynamics of the market of competitors to Bitcoin, and there are competitors because you cannot tell me Bitcoin dominance is 100%. It's far from it, and it's sliding.
It was for a while, but you're right. Now it's 50%, which means everybody's eating market share, right?
And yeah, and you'll notice that it started to fall away from that trend line because the dominance started to drop. And so I think that it was skewed. I think
He's
Plan B
missing that in the model.
was
That's right. That's the
he
key, right?
didn't acknowledge shitcoins. Like
Yeah.
as much as
Because that
you
money
may
would
hate
have
it,
otherwise gone into Bitcoin. Yeah.
yeah, you cannot create a model in what you wish the future will be. It has to be based on reality. He did that model. And shitcoins were in existence, obviously, and it was gaining dominance. So I think that needed to be taken into account. So I like the model and its
I had him on
foundation.
the show a few weeks ago, actually, and I said, one thing that you're lacking, I'm not the only one that said this, but one thing you're lacking in the model is demand. He goes, 100%. Don't disagree. He's like, directionally, I think this is correct, his model. He's like, but you're right. We don't have demand in this model in any way. And I'm like, well, how do you account for demand?
No, I disagree with that. I actually, before I really understood what he was doing, I said, "Well, it's supply and demand, right?" And no, it's about scarcity and valuation. It's not a demand and supply model. The idea around it is the more scarce it is, um, that creates a dynamic around demand and supply, both sides, not just demand, because every market we see demand, you see supply meet it, right? Because otherwise you can't buy the asset if no one's supplying it. So it's a model around scarcity and valuation. And so it sidesteps the issue of figuring out the random walk of demand and supply, which is what I do to get there. It creates a really nice, it's kind of like E equals MC squared. It distills down into something really clean, and you don't have to look at demand and supply. Everyone's trying to work that out because it's a complex beast. And you just go, yeah, look at this. This is scarcity, and this is how we should value scarcity. I just don't think he acknowledged the real scarcity was actually inclusive of Bitcoin, which diluted the scarcity, inclusive of shitcoins, which dilutes the scarcity. I actually love the model. I think that it just needs to be broader. I think I'll try
You
and do
should
something
recreate
about
it.
it.
Yeah.
I want to try it. See, maybe I'm full of shit and it's a broken idea, but because that's the thing, you have these great ideas, you run the numbers. Oh no, that didn't work. Right? It was a broken. You can at least you can test your thesis with support or not if you run the numbers. So yeah, worth doing. I think it'll be worth doing.
Totally do it and mention me. No, favorite chart. What is your favorite chart right now? What is Willy Woo looking at the most right now?
I'm looking at it technically called the Bitcoin Liquid Supply Shock Oscillator. I'm looking at it right now, and so it's effectively a demand and supply. So supply shock is badly named because it's not a supply shock. Supply shock is actually a ratio. It runs a ratio of the coins that are not likely to be sold divided by the coins that are likely to be sold, and and so and so there's a whole family of supply shock, but you could call that on-chain demand and supply. And so, it's just broadly a category of, wow, how do we do this? Well, I know an idea. How about we, let's say all the coins sitting on exchanges are likely to be sold, and all the coins that are off the exchanges are unlikely to be sold. You run ratio. That's a demand and supply. And so, what about the guys that have held their coins for 5 months or more? They're unlikely going to move because they've held for 5 months. All the other guys. So you do that ratio, and that's also a demand and supply. And then now the really juicy stuff is like, let's look at all the wallets and all the address and cluster them and look at the behavioral patterns of these investors and name the ones with high precision that don't sell. They just buy. They're like Michael Saylor versus the swing traders, and then you run that ratio. So that one's really timely. You get down to it's 24-hour responsive, and so that's what I really like. That's one I'm looking at because we've got that kind of eclipse moment where we haven't had since October 2020, and that's what I'm looking at the most. And actually, everything I do now, at least like my newsletter, it's all around demand and supply, and particularly using these kinds of forensics metrics. So yeah, that's one I'm looking at the most. It's in terms of on-chain.
What's the current market cap? You have that in front of you? What is the current market? I'm looking up the compound calculator right now. I just want to see something.
Market cap of Bitcoin today is 695 billion. So we're 30% off the $1 trillion.
I typically ask people, what do you think a 10-year price prediction is? But I'm going to tell you what I think you think it is, and you tell me if I'm right. This is different because of the things you said. I think you think in 10 years, we're at about 10 to 14 trillion dollars, which would bring us to around 700,000 to $1 million in coin, on parity with gold in 10 years. Do you think it's more or less than that?
I think it's the lower bound. I think it'll be
Lower
more.
bound.
I think it'll be more. Maybe close to 20 trillion.
20 trillion in 10 years? Okay.
Yeah, 20
So we'll
trillion.
double the market cap of gold more likely than not, you're thinking, over the next 10 years.
Yeah, I'm actually more comfortable in your zone, but within that range. That's my guess. That's my guess. I think a lot's got to do with how this plays out within regulation. A lot of unknowns right now.
Unquestionably. Spot ETF's going to be a big for it if we ever get that,
Yeah, and it's also, I think, whether like the central bankers, particularly in Europe, are dooming Bitcoin, and there's a lot of fight right now. I think how that resolves matters, because there's a fair chance that it'll be relegated to a good try, and will be a $1 trillion sort of exotic asset class, and not something that's major. I mean, that's
based on
that's game.
regulations and governments and all that stuff. Right?
Yeah, if
Because
like
you
the
just can't get
idealist
if they're
in me.
shutting down on ramps in major financial markets. It's
Yeah,
just
like
not
here in
gonna
Hong Kong, you can't buy Bitcoin unless you're
happen.
accredited.
Mhm.
Like, and that's, we're close to China here, and that's totally banned. They've banned transactions. So it's possible. But, there's the flip side for me. The technologist and dreamer thinks, well, hell, this is the fundamental technology that unlocks the digital revolution. And, the last revolution was industrial. And look how we went from
Mhm.
kingdoms to nation states. Well, nation states are kind of obsolete. Everyone kind of knows that you cannot
Yeah.
regulate, this stuff. You can't regulate the internet. Like, gosh, you've got wage arbitrage across. You can do any kind of like Fiverr.com. You could be an Indian worker on Fiverr.com and earn a good buck. So you got this sort
Yeah.
of borderless arbitrage, and same with now a borderless currency.
Mhm.
I mean, gee, taxing labor and businesses and printing your own money, that's the only two things that
It's
keep
not
a
going to
country.
stop it globally, right? I mean, it might
You can't
there
stop
might
it
be
with your current structure, which is the nation state borders, cannot hold back the internet or internet magic money. And the two ways you fund a nation is by taxes on companies and people. And companies are already arbitraging all over globally, and people are now starting to do it. And to print your own money, right? Fiat money.
Mhm.
And now it's a global money that's internet and magical. So, how do you maintain and fund a country when that sinks? So, I think that on the foundational level of what a nation state is built on, I think that's wavering. And there's a fight right now. There's a fight because they don't want to cede power, and there's a new thing arising. So I think that's the flip side to, like, then it's to the moon, right? Bitcoin goes to the moon and it becomes the new reserve everything, not any currency, but the new
All bets
sort
are
of,
off if that happens. Yeah.
yeah, it's like why do you want to buy real estate when you can buy crypto
Well,
assets?
first of all, it's just not liquid, to your point earlier. Like, I don't like anything that's not liquid.
Yeah, exactly. I mean, and it's like real estate. It turns out most people buy real estate for store of value. They don't want 5 houses to live in. Like,
If we can get rid of the infrastructure on the buying and selling of real estate with realtors and made it more liquid, like in some way where you could just like go online and bang, it just sells, it's impossible. But if they did that, that would help the real estate.
I mean, like the NFTs, you're like fractionalizing a house because it's non-fungible, and yeah, it's possible. Like, and it'll be really efficient market because the real estate's terribly inefficient. You can, like, you buy this house, you put a bit of paint on it, and suddenly you get 20% on it or whatever. That's an inefficient market, right? Paint is not priced in. So yeah, so it's and I think you'll find that there'd be immense data on demographics, because I think it's all on inner city dwellings and, like, catering for effectively the Airbnbs. Like, even like 10 years ago, Airbnb did 30% of its revenue from 2 to 3 month stays, which kind of tells you
Wow.
something. Exactly,
Hmm.
this borderless, nomadic kind of worker, digital worker, needing housing. So
Yeah.
yeah, it's already started. Let's hope the trend continues. Maybe did like the sovereign individual that foresaw a lot of this? There's this
Yeah.
one
Crazy.
paragraph that says we could probably see, like, as this starts to happen, the incumbent powers might create a pandemic situation, need particular passports, and shut down borders because basically COVID. I was like, wow, that fits in. This was written in, what was it, 90s or something? Anyway, so it's interesting. Like, shut down the borders so we can keep our power. But like, that was an interesting aside to all of this. But yeah,
Nostradamus.
yeah, it's like, no, but that's very foretelling, that book. Interesting
Hmm.
stuff. So anyway, who knows what the future holds?
I got two more things I want to ask you. One is about altcoins, and then let's go there. So, in the Peter interview I just recently heard, you said if you want to learn about markets and how they work, trade altcoins. Just don't put all your big money in there. Um, but isn't that just gambling? Like, explain why you say that. What do you mean by that?
Sure, it's gambling. It's gambling, but actually, all markets are. It's speculative, right? All markets are speculative until it's not. Like, if you're a Warren Buffett, you're less of a speculator because looking at fundamentals. I think I'm less speculative because I'm looking at fundamentals. But actually, you like the thing is with markets, and at least in the short term, you can see that they're controlled. And that's the first thing I learned trading little shitty coins, right? I learned that, hold on a second, just looking at the price action going up and down, it doesn't seem like it's organic. And then I was trading, it was Madecoin at the time, that on Poloniex, which was 150 Bitcoin total volume that was being traded per day. And when my wallet size um, was 5 to 10% of that daily volume, I noticed I could shove the price around. I could
Yep.
strategically
Mhm.
play kind of the football game, gaining yards in the direction I wanted. And I was like, that's really interesting. And it just turns out, if you talk to any market makers, that's the threshold. 5 to 10% of daily volume is what you need in their market to make that market. And then you can make the market fairly, like provide liquidity, or you can skew the market in a direction. And so you start to realize all markets are capable of being rigged. They're regulated because of that, but they're still rigged, right? And so,
NFTs, the same thing. That's what's happening in the NFT market, you
oh,
think?
yeah, times a
Wash
hundred.
trading and all kinds of stuff.
Like,
Yeah.
gosh, that's like, man, I could bid on my own NFT and give it a valuation of $5 million.
I mean, this is the crazy part. You have all these different addresses. You could just keep laddering yourself up by buying and selling your NFT to yourself, and you're not losing any money. And then the floors are rising, and then you dump. Yeah.
Right, and you see this in shitcoin, boom, 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 exponential. You get that,
Bang.
you dump it, and like, I mean, there was one point in 2016 when we're still trading shit coins, and like, oh, like I was, everyone's got their Telegram trading friends. Like, hey, what are we doing? We're buying what was it? It was like pink coin or some weird shit. It's like, this looks like technically it's a good setup. It's like, all right, I'll buy. Everyone's like, suddenly there's five of us buying it, and it's a tiny little shitcoin market, like tiny. And it was like, all right, I'm gonna put a buy wall here, provide confidence, and suddenly we were like rallying the price. We realized we were rallying the price up. And then we was like, wait, there's another group rallying the price up. And you think they're in Europe because of the time zone. And then it was like, suddenly we got it to a point where this thing got momentum and it started going exponential, and we just dumped, right? So basically, we did a pump and dump, but perfectly fair, right? We never had a pump and dump group. We just played market dynamics, being we were making a market and pushing the price up because we wanted to go upwards, and we had enough firepower between the five of us in this tiny little shitcoin market. So, like, I think trade shitcoins because you can learn all this stuff, and suddenly you understand markets. And actually, now if I look at forex, I go, oh, that's bottoming or it's in a bad trend. I'll wait a bit, and like any market, all of life is market. You're buying a house. What time of the market is it? So timing the market
Timing
and
is
reading it is
everything.
super important, right? It can make and break your livelihood. Like businesses that like invest in more capital infrastructure right when the market's about to top. That's important. You could learn that lesson trading pink coin, or whatever, like baby doggy coin. You can learn that stuff. So why not? Like
Shiba,
it's a
Shibu,
lesson,
Shiba Uno, whatever it was.
right? It's like learn. It's basically trading is about learning as much as you can for the amount of money you're losing, because you're going to lose. Like 99% of people lose over the long run on trading. You just need to know that.
What is your recommendation for people though? Like, do you say just buy Bitcoin and forget about all this trading, or because you did say you should do that to learn how markets work. That means put a small slush of money and just kind of understand the trading dynamic. But like, they're not going to be able to trade against you and others. Like, how are they going to?
I think that you want to like just like get some exposure, get on with your life, like whatever. Like I bought
Yeah,
3% of my investable in assets in Bitcoin, and that's it, and that was fine, no sweat, and I think it's
and
fine.
let me ask you this: you bought 3% in Bitcoin when you did, right?
Yeah.
Did you increase your allocation over time, or just let it grow and just not rebalance it?
No, that was my cap. Like I started with one Bitcoin, and I was like at what was it, $600, and I just went up to, and I said no more than 3%.
But do you rebalance it to keep it at 3%, or just let it ride?
No, I just let it run, and then it was like, gosh, it went to 90%. 2017, it was like over 90%, and I was like, whoa, that's nuts, right? But yeah, I just say do that and forget, get on with your life. If you want to learn
Yep.
about trading and markets, you want the education, you've got school there, a very like school of hard knocks and fun.
I got to say this too, because I have a friend. He's a hedge fund guy. He managed $14 billion at a hedge fund, right? And can't get into Bitcoin. He traded it last year. He feels like he's so smart because it went from like 15,000 to 30,000. He's like, look at that, he's so smart. But I'm like, just hold it. And he's like, you should be rebalanced. And I was like, no, 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 no. I was like, you should. So speak to the hedge fund guys, the institutional money that rebalances it. Why not just let it? Why not just hodl it? Just let it ride. Why do they rebalance it out?
Because they have mandates. No one wants to lose money. The mandate of any hedge fund, whether it's there or not, even if they say we're going to have volatile exposure, their internal mandate is don't lose money. Right. And so the volatility of
So
Bitcoin,
they at least take their cost basis back out for their investors, right?
yeah, like if you lose money, you're not going to get your next round of. It's really, you make money as a hedge fund by raising capital, making a bit of money, and clipping the ticker on the money you make. And it turns out
Well,
that
they get their 20% carry on profits realized, right? So they got to sell.
so if you make 100, you got 100 million under management, you made $10 million, right? Maybe you're not like a star performer, but that's not bad for a year. Make 10% on 100 million. You're right. What do you make? You make $2 million, but what if I can raise $1 billion, right? And I can make $20 million. So the biggest factor in making money for a hedge fund manager is not by necessarily performing really well, exceptionally, going for that long, like 10x gain in a year. It's effectively going, how can I 100x my capital base? And I can't 100x my capital base if I make a loss, because that's a bad mark on my books. No investor's going to put money in something that loses month to month. So
So they're at odds, and they're not aligned with the Bitcoin maxi hodlers, right? Because
right?
they're gonna keep coming in and out, create volatility, and that's their mandate.
It's a very interesting asset class, right? It's like a fusion of what we do, right, within tech and venture capital with monetary or commodity trading, which you can trade it, but actually any venture capital guy, they don't buy dips, they buy tops. You always buy a top. You want an up round. It's like, all right, we're getting more adoption. I'm buy the next up round at the top.
This isn't going away. The biggest thing is don't go to 0.
Yeah, whereas the hedge fund will sell the top and want to buy the dip, right? And so they're two different strategies,
You
and
don't
they're
buy
two
the dip
different
in
ways of
private
making
equity
money.
because it's probably going to 0.
Yeah, right. No, well, they're used to assets under saturation. Like the gold market's at saturation, copper's at saturation, steel, oil. They're not well, like we're at 2.5% saturation right now of Bitcoin. So the VC guy is going to go, well, if it keeps making new tops, I'm going to keep buying new tops because I'm going for the, you know, 1000x or something. It's changing now, right? We're transitioning from the 1000x to maybe a 40x, and so we're going from the venture capital mindset to being more tradable. And I think that's a big impact on this market right now. And that kind of investment's shifted to a lot of this sort of layer one protocol coins, that sort of thing.
But you do reserve the right to say you could be wrong because there could be a black swan event, global macroeconomics in some way, geopolitical event, some sort that could make Bitcoin have a rush of capital going into it, right? So that's always the
Yeah,
outside.
totally. I
Yeah,
mean, like everything here is just highly sort of pie in the sky guess work because no one
we
sees
don't
the
know.
future. Now, no one can see that, like, you know, we would have this bump in the road called a COVID event. Not 1 year. Maybe you
Mhm.
could see it 4 weeks in advance.
Yeah,
And very few people saw this slide. I didn't see a slide from 69,000 down to this level. Like, and that
no,
just
me either.
happened,
I thought we were going to 100. Yeah.
right? Well, I mean, it wasn't valid by on chain,
I mean,
nothing
all my friends
traded.
and family, I was just like, just don't try to trade it. Just buy and hold it.
Even the
Don't
hedge
mess
fund
around.
guys, they were like, "We're selling down in December. Hold on to your hats, man. This thing's gonna go in January. We're gonna redeploy, and all this money's coming in." It's like, no, it didn't, right? And
No,
they were the
mostly because
people that were
I
meant to
think it's
put
all
money in.
Fed and interest rates. And
Yeah,
now
they were
how
like,
does the
"Hold on."
market respond? Mhm.
Exactly. January came
We're in a
around, like,
waiting
risk
period right now.
off. Let's wait a bit. Let's wait a bit,
That's it.
right? So
Yep.
no one sees this stuff coming. So it's very
You never know when
unpredictable.
that
That's the thing
happens. And
with
when it
markets.
does, it's dangerous. Yeah.
Yeah, like no one can be the oracle of markets. Like no one. Like
That's why
otherwise,
Buffett, right? It's a weighing machine versus a voting machine, right?
yeah,
So
exactly. I mean,
so
he's
your point is just buy it and get on with your life. I like that line.
yeah,
Buy your
right.
Bitcoin, get on with your
Like
life, right?
unless you want to be a full-time shitcoin trader or a full-time maximalist or something, but there are very few. Like the top accounts on crypto Twitter, excluding the bots and all that sort of stuff. Probably there's a million engaged crypto Twitter people, and
Mhm.
we know there's over 200 million, like 200 million, probably close to 300 now, of ID independent unique IDs on exchanges that have bought Bitcoin. So, like, what is that? That's like 0.5% of the market that are really into this shit. Like, you know, hodl, and like, all this stuff we see on crypto Twitter. That's not the real world. That's 0.5% of the most passionate people. So just get on with your life. Buy some, get on with your life, have exposure. Um,
We're all just
and
stuck in an echo chamber on Twitter.
oh yeah, I mean, I don't tweet much these days because it's not very satisfying. It's gone like they used to be really interesting. It's like 2014. It was like a lot of people that were really deep into the protocol, and we were really concerned about how this net would perform under congestion. Like we were like the forks. Like, we were really into the deep side of it, even deep Austrian economics. These days, it's just meme central. So yeah, it's like you can get on with your life instead of spending 90% of your day in memes.
All right, and I usually do this in the beginning of the interview, but because of the where we're at with Bitcoin right now, I just wanted to go right into the state of Bitcoin and talk about Bitcoin. But I want to talk about your background just a little bit. So if you could just tell us, where'd you grow up, socioeconomic kind of conditions, what did your parents do for a living, and then what did you do prior to Bitcoin? Like, it just kind of go. You said startup world. Tell me about your path a little bit.
Okay, first thing is I haven't grown up yet. Hope I never do. So I was born in Hong Kong, super in a little village actually. I sometimes think that was a squatter's village because I saw a squatter sign when I was an adult there, and and so we were really poor and we flew out to New Zealand, and like we had a distant family member invite us over. We went in and like he ran a restaurant, so we were like a sort of a poor immigrant family, and so like didn't come from much money. My parents were like, "Oh, all these things more important than money, like friends and family and all this stuff." And I saw through that they didn't have a lot of freedoms, restricted. Actually, my mother, well, both of my parents died. My mother died of cancer on a wait list for surgery because we couldn't afford private healthcare. And I was like, actually, I had to reset this whole thing around money. It's like money is actually just a unlock for freedom and choices. And so I had to throw all that away from like a sort of poor, lower class working family into like reprogramming myself and reading books on wealth, Kiyosaki, etc., etc.
Mm-hmm. He's always
And
the first step.
yeah, exactly. And then I did engineering, was a product designer, designed medical equipment. It was quite fun. Pivoted into startups when the .com age came, quite late to that. But that's when I got
What years was that? Like the 90s? Were you doing .coms in the 90s?
yeah, it was sort of like late 90s. I kind of went backpacking. I sort of like, oh, everyone does this overseas experience as a Kiwi. So I did it, went to Canada, took a little Palm Pilot with me, sort of got really geeky on it. Because let's remember, not a lot of people even had cell phones then.
No.
We had this little digital device, and I was like, wow, imagine this. This is going to be in everyone's pocket. And I was like, this is a huge wave. I've got to get into this. I was writing my email. Everyone was using cyber cafes and and Hotmail, and I was using this Palm Pilot and uploading it. It was so satisfying, and it was my personal computer in my pocket, and so I got into it because as a kid, my roots as a kid was tinkering with these sort of 8-bit computers, and so somewhere along the line, I pivoted and got contracts to design websites and user interfaces for this sort of wave of startups building mobile software, and eventually started my own one, and that did really well. We kind of own that sector of the email market for that platform. So I learnt my ropes in technology and sort of kept in that game of startups for a good part of a decade or so. And that's when Bitcoin came along. I was like, I kind of get tech, and along the way, I had a decent amount of money for myself at a young age because that startup did well, and I
Did you sell the company or you just cash flowed?
oh, it was super. It would be bootstrapped and cash flowed. It was turning over millions in profitability, and like it was pretty great for me because like I'd never had money before, so I just went
What did you do when
traveling.
you became a millionaire, by the way? I love asking people this question. So when you first became a millionaire, do you remember it? And did you make a big purchase or anything like that?
Well, it was a paper millionaire thing, right? In first, right? So I mean, I was already earning a decent. Well, I was already making effectively more than my engineering salary every month as this thing was running up, and I was like, I had money at that point, so that's one differentiator. But I changed. Nothing changed because I was so focused on working. You're going to see this in other founders like SPF. He's just working. He's. And then there was this point where we crossed over $1 million of sales. I think it was before we made the really big money, but like it was like on paper we're millionaires on valuation, and it was really anticlimactic because I was like swamped with all the problems of the world, co-founder issues. Like it was like it's high pressure as a startup. It's kind of self-punishment, really. If it's glorious to watch it in these movies like The Social Network or whatever, but actually it's just pain, right? It's just pain
A
and
lot of
grind.
stress.
Pain and grind for a 5% chance or even 2% chance of success. And it's going to suck all of your money and energy if you fail.
You're so right to say it's anticlimactic because people ask me this on podcasts when I'm a guest, and I'm like, I don't remember a moment where I was a millionaire. I remember getting there, but like when you slowly get there and you earn it, it's not like a liquidity event. Like I sold my company, got a check. I slowly made money.
It's not like crypto, whereas crypto, they're like instant millionaires, and they didn't really do too much around that. And I think I hear that's kind of just as bad. Like they get depressed because I'm still not happy, and
It
you
does
know,
never creates happiness. That's for sure.
the great thing about doing that grind is you get to meet other people that have done interesting journeys, and like
True
that's the
bonding
highlight.
experience with people. Yeah.
Yeah, it's the highlight of meeting other people such as yourself that have done the grind, and you got that spark, and and you got a kindred spirit, and you just can do cool shit together. And that's really the joy of creating things with really cool people. I think it's the relationships that come out of that grit that comes out of it. So I mean, it's again, it's like learning to trade on get punished, but what comes out of it is a lot of learning.
Yeah.
And it's fun afterwards, right? Like it's much nicer not to be a startup founder now, having done it.
I love not being people ask me all the time, like Clubhouse and shit, they're like, "When are you gonna do your next time?" I go, "I never wanna be operationally managing people and investors again. That's not what I wanna do for a startup." I go, "I'll manage a fund, like, I'm an investor now, but, why do you wanna do that grind? You've been through it, you know. People who haven't been through it, and I'm listen, I know people like Max Levchin, the founder of PayPal. He did PayPal, then he did Slide. Now he has a firm. He's a perpetual like Ev Williams. He did Blogger, Twitter, Medium. Like some of these guys are just repeat offenders,
Yeah, yeah,
But
right.
they enjoy that. I did not enjoy managing all the employees and stuff. I just didn't really like it. It was a means to an end for me, bro.
If you have the right co-founder and you're just doing the thing you love, I'm sure there's a joy in it.
I liked the beginning. I don't know about you, but I liked getting a small team of like 5 to 10 people, building and you have a little hypothesis, try to prove or disprove the hypothesis, try to get traction, get go. But it gets to a point where you have like 30, 40 people and I'm like, this is becoming a job. I don't really like jobs.
Yeah, no, exactly, and you're trapped now because you're the majority shareholder, you're board, it's CEO. It's horrible.
Yes.
You're trapped, right? And so, like I love that early bit. Like every startup is this beautiful dream, the dream. You're getting traction, and at a
Yeah.
certain point when you get the first traction and the success, it sucks after that. The growth is just mundane. Oh, look, we made more money, got more growth, KPIs with investors want to hit this.
Yeah. Once you figure out that repeatable wheel, it's boring. You're just doing the same thing and scaling.
Right? There's no creativity at that point, and I think that's like a lot of founders are first generation founders, and at that point you hand it over to, the scaling guy, and I think that makes a lot of sense. And if
Yeah, I
you
have no interest in that part of it. That's why I like to invest early stage, and I could imagine myself running an incubator. I don't know if you feel you could ever do that, but I would love to sit down with teams and whiteboard ideas and go through the early adoption phases of their product or whatever. That stuff's fun.
I I don't know. I like these incubators. I think is the wrong model. I think it's
Oh, interesting. What? Tell me why.
I think the best startups don't need an incubator. Like they don't, there's no school, right? There's no school that's going to teach you what you're going to face because what if you're really running a startup, you're going to face shit that no one's solved before. Otherwise, you're what's the difference between a startup and
That's
owning
true.
the corner store that's selling groceries? It's a known path, and you do a thing because it's all mapped out. The startup's only a startup in hyper growth because no one's done it before, and you got to figure out how to solve it.
Well, yeah, no, but Elon certainly didn't. But if you think about Zuckerberg, right? He figured out what he figured out when he was at Harvard. You could argue that he took the idea, but whatever. He got scale, started to grow, goes to California, meets Parker, right? Sean Parker, and through him gets Reed and Peter, right? Thiel. And then they continually added. The one thing I say about Zuckerberg is that he was always smart in surrounding himself with really smart people, and he was open to listening.
Yeah, okay. Well, that's different. I mean, we might be talking about different things. Like if you were talking about bringing in mentors and legends, I don't listen to anyone unless they've like done something really interesting, really big. Because when they talk, there's gravity, and it's simple, but they've done the walk and it worked. I'm talking about the regular incubator where you will have a cohort that comes in and they've got interesting ideas, and we're going to go through the lean startup together. and we're gonna like go through this industrial process of how to solve your problems. Like the let's test this idea. It's like, well, shit, you should be doing that anyway, right? It's but what where is the creativity? Like, and then you'll get these advisors and mentors.
Well, it might help them go because everything's trial and error, so it might help them not go through some of the trial and error.
I think they learn a lot. I think they learn a lot, and then they go away. Their startup fails, and then the success rate is really bad anyway. It's like I'm like with Chamath. This is shit. The incubator thing is shit. And then like what separates like let's talk about an accelerator. What separates Y Combinator from the rest?
Paul Graham.
You got it. Basically what you said earlier, let's read Hoffman, let's get these cool people and their network together. That's it.
It's the network. So that's why like Science, BetaWorks, and Y Combinator are like really the only three that are
Right.
relevant, you know?
So like everyone's copying the model and they think the model is magic, and it's not the freaking model. It's the network, right? It's the brains network and the capitals network and the like, it's like I was talking to another founder. It's like, it's really funny how like there's some people in Silicon Valley that are founders. They are like they worship Steve Jobs and they're copying him by being an asshole, and they don't realize the asshole bit was not the reason why he was successful. It was the other stuff.
Yeah, imagine he wasn't an asshole. How much more successful?
Yeah, right. So they're copying the model of an incubator or an accelerator, and they're not. And how do you copy Paul Graham, right? So that's what I think. But we're talking about different things. I think what you're talking about is actually the Paul Graham side of the Y Combinator.
Yes.
Yeah. So anyway, a little bit of rant on Startup World, even though this is meant to be about Bitcoin.
It's okay. People can listen. If they could just shut it off, if they don't like it. I always tell people that in the comments.
Yeah, no, I love that stuff. It's like,
Just trust me, I'll hear in the comments, Jay, you've interrupted Willy too much. So I get that all the time.
that's usually me and Tone Bays. Right?
Tone was just actually in a 12 class with me yesterday morning. We were
Oh
talking.
yeah, was he shitting on well, were you talking about shitcoins and scammers?
No, we actually were. What were we talking? We know what we were talking about. The title of the room was what was the name of the title? I created the room in the morning. It was, "Is the American Dream Still Alive?" That's what it was. "Is the American Dream Still Alive?" And obviously, he's immigrated to the United States 30 years ago. He was a great person to jump in the room, and so we brought him on stage. We were talking about what his views are on the current American dream. But first of all, define what do we think the American dream is, because it means different things to different people. To me, it's opportunity and the ability to advance and upward mobility in society and stuff. And to some extent, that's gotten a lot worse, but I still think that it exists. So anyway, it was interesting to hear from Tone actually, because coming from Russia.
Yeah, that'd be really interesting because he's similar for him, right? He pivoted a lot of ways, and now he's a personality. And
Yeah, he did. That's right. Yeah, yeah. He's a smart guy. I like him. Listen, I've taken up over an hour and 24 minutes of your time, plus an hour before we even got started. Where can people find you? Everybody knows who you are, but just tell everybody.
Twitter's best, Woonomic, and kind of links from my profile. I write a market intelligence newsletter. It's pretty popular. No need to subscribe, but if you're an investor, it's sometimes useful to know what's underlying the fundamentals. Yeah, I've got a chart site. It's linked in my Twitter. Some of the models are there in live, and yeah, you can find me on good podcasts like this. I do a lot of interviews, and so yeah.
I put out a tweet this morning. Might as well go through a couple of these. We've got a couple minutes, right? Asked him, if you want to ask Willy Woo anything, give it to me. So somebody says, ask him why he thinks the rate of return of shitcoins will outpace BTC moving forward. And he said this on, I guess that's Peter's podcast, What Bitcoin Did. Bearish Willy equals another point in favor of BTC dominance. Ready for the big run. This is the maxi. So what do you think?
Well, they're the two same things, right? Yeah. Shall I answer that, or should we? Yeah. Okay.
Yeah, go ahead. If you want to quickly answer it, yeah.
Well, it's really just it's Cantillon effect, right? The first people in with the new money printers, that being the shitcoin, is you're going to get huge volatility to the upside if it's successful, and you're going to lose all of it if it's unsuccessful. So if you're good at that game, you're going to we always see like, look what Solana did. It did 100x in less than a year. Bitcoin did is not going to do 100x in less than a year. Might take 10 years if we're lucky. And so it's like the new coins, highly volatile. Doesn't take much, new capital flow. So they're always going to beat out Bitcoin if you know what you're doing. That the key thing is if you've got the right VC mindset and you can filter through 10,000 coins and find the winners. And the winners are like a handful.
Yeah, exactly. Okay. Why is Bitcoin decoupling from S&P in the wrong direction? We've kind of talked about this a little bit, but if you want to answer that.
Yeah, it's the pogo stick, right? Why is it decoupling? Yeah, the spring bottoms out.
Rewind for the answer.
Yeah, rewind, adoption S curves, blah blah.
How it separates in the balances of the exchanges, the BTC of the exchange and the BTC in custody of the users. That's all the guy wrote. What the hell is he talking about?
This is a tricky problem, right? The question really is like when we're looking forensically, who owns the bitcoins? Where there's the grouping of exchanges, and then there's a grouping of custody providers, like Coinbase Custody is one, or BitGo Custody, or there's a number of custody providers where a lot of funds and even large high net worth people, family offices, will hold their coins, and they'll appear on a cluster of wallets. That's a very difficult. It's a very difficult problem. So yeah, it's not well resolved. It's not my work. It's the work of Glassnode and other on-chain providers, and they have to do a lot of forensics. But you can do sort of like rough ballparks. You kind of know by reporting how many coins under custody they have, and then you look at what we're tracking within the exchange. Like Coinbase has so many hundreds of thousands of coins or millions of coins, and this is how much they're meant to hold in custody. And you can sort of compare the two and go, well, this is definitely their exchange, because if it was custody, then it'd be a lot bigger. So you can do little bit fact checks like that, but it's a mix of figuring out what's known under reporting and what we see on chain, and it's a constant cat and mouse game trying to figure out that. Hope that answered the question.
Last question. How old is the kiddo now? And is he ready for the second?
My daughter, she is almost 8 months.
Okay.
Yeah, and
And
that's probably all we'll say. Ready for next. I mean, I tell you, like, you need to catch up in your sleep first. Yeah.
okay. Thank you very, very much for coming on the show. Really appreciate your insight and your thinking around Bitcoin. Everybody, Willy Woo.
Thank you, Jay. Been a pleasure. A lot of fun talking.